So, as we all know, simplicity is key. Understanding something in the most simplest form is absolute understanding, and that applies to the markets as well. Hope you guys are having a wonderful start to your Saturday, and happy Memorial Day weekend to all of those. Hope you're having a wonderful time. So, what did the market do this week? And this is going to be the short recap video, guys, so this is not going to be the full-blown length version, but we're going to go over all the juicy bits real quick here so you're ready for that Tuesday. Again, Monday, the markets are closed, so the market this week closed higher than the previous week, even though it may not look like it, right? We did have a weekly breakout. We did not break out of the range. However, our closing price is 5 cents higher than we previously were. So again, we basically are setting up another weekly continuation of higher closes. What is concerning is that we did not actually close above the previous week's high. The previous week's high was 531.52, and Thursday, with renewed inflation fears, basically sent us lower. However, on the Friday, we did rebound on the S&P and NASDAQ, both pushing significant numbers. NASDAQ closing 0.95 higher, S&P 0.66. We saw the Russell gaining strength. So again, seeing this rotationary period, VIX saying at subdued levels, which is checking all the boxes pretty much for a continuation into next week. And we're going to be talking about also what's coming up in the catalyst for next week. We did note that the fear and greed index did tick down to 53. It was 64, and it was knocking on the door of extreme greed at the beginning of the week. However, we are back to neutral, which is neutral really that bad? If you think about it in the net speculative positions realm, no, neutral is not really bad. You really didn't have a lot of things to push us all the way to fear. So therefore, we're retaining this neutral stance, a calm, collected, going sideways, possibly cooling off, setting up for the next rally. We did note that a lot of shorts most likely did short this top here. That was generated off of the NVIDIA earnings and then basically subsequent sell-off in the market. And again, we called out that there was most likely going to be a 10-to-1 split the night before NVIDIA earnings that we were streaming. And if you guys want to see more of those streams, make sure you guys have the subscribe button enabled and bell notification so you know when we go live. We usually do it 7 p.m. Eastern, Tuesdays and Thursdays, sometimes Tuesdays and Wednesdays, depending on the news schedule, right? Like if you have a CPI midweek, we will adjust the schedule. So make sure you guys have that enabled. And if you're enjoying this content, if you could appreciate it if you could hit the like button as well. So let's dive into what actually happened this week and some of the things that I'm looking at, right? So let's start off with net speculative positions. As I called out last week, that this most likely would stay the same, double down, and I really didn't see it decrease slightly to negative 22.8k positions, which is again net shorting the positions. NASDAQ positions and increased over the subsequent week. And let's just jump over the NASDAQ to see, yes, we basically closed on a higher weekly basis driven by those NVIDIA earnings. We did close, meaning we are higher than the previous week, even though we did retrace a little bit that new high that we established, all-time high. So that's going to be a level that we're going to be looking at. However, we are higher. So therefore, the NASDAQ is leading. Chips are leading tech. Tech is leading SPY, even though SPY is a little lagging, and we can attribute that to the IWM. We can clearly see the Russell had a bit of a rough day the previous day. However, it still maintained a 50 SMA retest and subsequent bounce. So we're going to basically be looking at, does this level up here of 207 basically get retested and pushed through on the subsequent week? Again, we're going into a shorter week that we got a couple news catalyst events we're going to talk about in just a moment. If we do that, then we're most likely going to get continuation. Again, we've got GDP and PC next week, which we're going to see if there's any expectations and what we need to be looking at. We can also look at the riskiest asset in the group, which is Bitcoin, above its 50, above its 9, consolidating sideways similar to S&P, setting up for the next move. Now, that move can be to the downside, it can be to the upside, and I do believe until we get the level breaks that we're looking for, which is going to be for Bitcoin, the 50 SMA, then we're not really going to get any bearishness. Or if we break 72,000, that's going to be the bullishness. Until then, we're in no man's land. We can also look at some of the bigger kept stocks like Apple, right? To me, I spot an A to B pattern on the way up here. So if we draw that out logically, A to B, B to C, projecting Apple up to $192, right back to its all-time high. So again, Apple looking like it wants to continue having this continued strength. Also, if we look at Microsoft as well, retest off the 9 today and continuing higher, significant trend to the upside. So looking at all this, I'm like, okay, well, can someone please tell me the bearishness in the stock market? We can see VIX rejecting off its previous support level. Now, this doesn't necessarily mean that VIX is going to go quietly into the sunset. It just means that people aren't worried. They're not buying insurance. So therefore, insurance is really cheap and people are saying, nah, I'd rather go into the market and buy the market, which basically means there's a lot of bullish momentum in the market, and that could be cooled off next week, right? We got to be cautious when we say that there's pure bullish momentum because we do have something going on this next week. And we do have some consumer confidence on Tuesday. Wednesday, there's nothing much besides Williams speaking, but Thursday is where the show starts, right? So we have GDP quarter over quarter expected, 1.6 previous expected, and previously was 3.4 on the last quarter. So we're going to see if that 1.6 that we got last time is confirmed as the GDP for the quarter. We also get a core PCE prices as a preview. Again, this is a significant increase in expectations, 3.7 versus 2.0. So that's going to be something we're going to be looking out for. We do not have the PCE expectations yet. So when those come out, I'll make a subsequent follow-up video to this. But if we look at the personal spending and income, we can see that it's cooling off on a month-to-month basis. So does this number come in hotter, or does this number come in basically in line with the previous month? Again, 2.8 previously and 2.7 respectively. And this is the one that moves slow, guys. So this is going to be the one we're going to have to pay attention to because this is the Fed's preferred inflation gauge. And the reason it's their preferred gauge is because it moves so dang slow, meaning it's slow to go up, but it's also slow to go down. So we have to keep an eye on that and keep that in the back of our minds that we may start seeing that subsequent increase that we saw previously once PPI started hitting off for a month or two. And then we started seeing it trickle into PCE when we had that nice bump to 6%. CPI. So again, just keeping history in the back of our minds. I'm going to wait to see this number on Friday before putting any big leverage trades on. And I think everyone should do the same. I'd rather trade the news after it's come out rather than trying to predict it, just because if you're on the wrong side of that trade, it's going to go very quickly against you. And I just personally don't like dealing with that. The same way I'll play earnings, but very small position sizing, right? Keeping size small mitigates risk in the larger sense and makes you a more profitable trader. Now, the one thing I do want to talk about is yields, right? Yields have just been going sideways. They haven't been doing much, and we can see the reverse repo is just sitting at 431,000. It's been sitting stagnant in this region for quite some time, right? So we've basically been here since the beginning of April, almost 2 months in, that we've basically been hovering at around that 400-ish billion dollar mark. So there's not a lot of liquidity problems necessarily showing up yet in the markets, and we can see that by the bond market not really doing much, right? 30-year going sideways, 2-year actually pushing up as these inflation fears are reignited. But then again, we've been talking about this for a while. It goes up and down. It has this nice big move up, then comes back down, move up. So I personally think that we're just going to see sideways action until we get a clear date from the Fed when they're actually going to start cutting. Then subsequent bond prices are going to adjust, and we can see TLT, right? Just playing this kangaroo game, got rejected off of the 200, found support on the 50, and we're just playing this kangaroo game. So I would just stay away from bonds if you're looking to play larger swings, right? If you're just looking to rotate bonds over and over again, yeah, this is a nice time because you know what you're going to get. So that's what I'm personally doing in my retirement account until all this craziness is over, and then I'm trading my other accounts for the S&P with options and stuff like that. That's just what I'm personally doing. And we can also jump over to China as our closing remarks, that they had a nice little pullback, which again could have been the reason that the markets were saying, hey, inflationary fears reinsurging, basically people just wanting to have a logical reason why the market went down rather than just people saying people taking profits, right? So again, we're looking at the bigger cap stocks. They're holding strong. VIX staying at this below level. Bitcoin looking like it wants to basically just kind of run again. And last but not least, the dollar just going sideways for eternity, right? So if we just look at this, once we came back to this level, it just looks like head and shoulders in my opinion, right? Left shoulder, head, right shoulder. Are we going to get that weakening in the dollar, which is bullish for stocks, as the Federal Reserve goes towards a pivotary point? Or is this about to rocket up and validate that pattern once the PCE inflation comes out on Friday? I'll make sure you guys are updated on that when those expectations come out, and we will keep you posted of that, most likely stream on that Friday. But again, thank you all so for watching, and I hope to see you in the next one.